If you're looking to get a funded trading account, it's important that you partner up with a firm that is reputable. A firm that's led by a group of traders that have spent decades on trading floors and desks all around the globe. And it's important that when you take an assessment, you follow one with sensible rules that are easy to follow, that promote good risk management skills, because ultimately as a trader, that's how you're going to succeed in the markets, is with good risk management. And also, you want to be surrounded by a community of traders and have tools at your disposal. And that's what ForexAnalytix is. So in the month of July, if you take a trader funding program assessment, you're going to get a 45-minute consultation with me, Blake Morrow, president of ForexAnalytix. And I'll spend 45 minutes with you one-on-one and talk you through the assessment process. So book your assessment today. I'd like to talk to you soon.
Bruce mentored Blake or reminded him of Wyckoffian type of formations and trading. Bruce, I'm going to ask you to unmute. It's great to have you back.
And Dale, I'm gonna pass you. I'm gonna let you take Bruce, but I just want to say, yeah, it's been, the Wyckoff strategy has been one of those ones that's been around for so long, and things in my toolbox come and go sometimes, and it's one of those that now when I see them setting up, I can't unsee them. They're not like super common for what I do, but when I see them, I tend to pay a lot of attention. That's why it's great to have Bruce here. So anyway, yeah. Bruce, welcome, and you guys have a great interview.
Like everything else, it's a tool, right, Bruce?
Absolutely. Blake brought a tear to my eye when I saw that beautiful upthrusting action. That was fabulous.
Bruce, great to have you here. You guys have a great interview.
Blake, that's real common. Real common is to have that final run, in a big distributional style structure be a new high, and brings in the momentum traders and so on, especially after a big uptrend preceding it. And that's what you showed us. And I was getting a little choked up.
Yeah, so. I tell you what, it's really a beautiful thing.
It's a beautiful thing. Yeah. So thank you. And it's always so much fun to be with you all. And I have to tell you, you guys are like the modern morning call. And I really just love it. It's just your analysis is just so good. And I thought that the dollar CAD was just a great study. And you could just see Wyckoff all over that chart. And that last rally up to resistance was a really, really good rally. And so if, in fact, after that news comes out, it doesn't give back and go back into the structure, but just sort of pauses and hangs out at resistance, that could be a really good clue. So really fun stuff. And I'm from those old morning call days, from what do they call those, shout out or shout downs, or
it was the squawk box.
Squawk box, because we had literally
CNBC. That's how CNBC came up with it.
Yeah, it's like we're way precedes them, and just like you all do, you really ground us, and sort of, and help us to get our game face on as we go into the new day. And that's a big part of, I think, what this does. And you guys are just, you do a good job of it. So you really do take me back to the old days.
Yeah. I mean, the art of it has always been not the if, but the when.
Yeah.
Right.
Yeah.
The when. Everything is the when. I mean, that's why we have to wait for the when and not just trade the if. Is this a new thing, power charting for you?
Oh, no, that's my old show, as a matter of fact. But this is just, hey, everything's risky,
Yeah, right.
And, we don't give advice here, but we certainly have a good time. And it's always really fun to be here. And the thing is about like talking to Dale and Blake and everybody is that I never know what the heck, where this is going to go. So I just put together just a junk drawer of charts and hope that I can hit the mark. So anyway, but
what's on the docket, do you have?
Well,
Oh,
well,
go
this is
ahead.
from an old blog I wrote, and I have this. I have accumulation and distribution structures. We are going to look at some of that today, and I didn't put up the distribution ones, but this sort of goes to what Blake was talking about, but he was talking about distribution. But see, look at this. We call this a spring. It goes down after accumulation is nearly complete. It goes down and makes a slight new low. And this completely just shakes out. You know, there's stops down there, and it just, people think, oh my God, here comes the next leg down in the bear. And in fact, this is just a probe. And then you look, I mean, there's certain things you look for in Wyckoff to tell you that this is in fact a spring and then a test. And then this was that really good rally we saw in dollar CAD. Was you saw this terrific rally up to resistance, and in this rally is better the ones that preceded it in the structure. So there's lots of little tells in the way that the bars and the volume act. So really fun. It's just fun. And
I was going to ask you, Bruce. You know, I've been talking about this for a while, and it has nothing to do with technicals. But you know, my sister's plan is to get out of the market right before the election, get back in after the election. And I have to think that multitudes of investors are thinking it was going to be clear sailing until, you know, October, November, right? So they could sit. So this July, could it be a surprise that we could have a nice little bear raid here to get people to panic before the election and then rally into it?
Trying to get a half a step ahead of Dale is really hard, but I do have a chart for this.
I knew you did.
So I said, well, now Dale's going to talk about this. So anyway, this is the S&P 500. Now, what we're doing here, this is as far back as we can take the data, and SeasonX, you know, they're really wonderful friends. They're good people. They have a seasonality engine on their website. And so what I do here is all I'm doing is I'm taking election year seasonality. So I'm going back and I'm looking at all the election years going back as far as there's data, which is 49, and looking at just the election years. And this is what it looks like. And we don't look for extent where, like, we sort of ignore these scales. We look for directionality. And last year was just like scary good. This year is pretty good. And so you can see here that the blue is the seasonal, and then the red is the S&P. And this is just daily. And here we are in the month of July. And note that we have generally an upward bias, little pause at the end of the first quarter. Well, that actually came in April here, and may have been related to this or to this. And then you have strength, and the strength has taken us into July. There's a hiccup into the end of July, and then continued strength into August, September in an election year. And so we just have to test our hypothesis against what the charts are really doing. But here we go. Here is like the weakness in, I think some of the more important weakness in the year really goes into the end of the third quarter, beginning of the fourth quarter. And so that this weakness could take us into the election. Yeah. And I do think
bottom will come before the election.
Right.
And then we rally into the election.
And so this, so this, so far, if you just sort of stay with the directionality, this has been really, really helpful. And it wouldn't surprise me at all if we, in the third quarter, didn't have some kind of a pause, because it's like, we just have to assume with these characters that on, all sides, that there's going to be drama. And boy, we're getting it. As soon as we got into July, it's just all kinds of things going on. And but maybe the bigger part of your sister's question, one for all of us, is here is this is again, our friends at SeasonAx created this chart, but this is the 10-year decennial pattern. And this is going all the way back to 1897. And what they do is they take all the years of the decade and they just add them together, sum them up, and get tendencies. Doesn't always work. Sometimes on occasion it doesn't work at all, but I find it to be eerily good. So this cycle, Dale, has been the seasonality, or the decennial seasonality, has worked out pretty darn good. And so you can see here, I just laid over this classic accumulation structure, and typically the weakest part of the decennial is from the 0 year 2020 now into 22. And in fact, that was the year that we got our low in 22.
Right.
And then you work up the right side of the accumulation structure in 23 into 24. And then 24, which in this case is an election year, tends to be a range bound year with weakness into the end of the third quarter. And then thereafter, once the election is over, you get good strength.
Yeah. Good. It becomes, I thought we were already parabolic. So it looks like
look here. Yeah, look at, I mean, this has been fantastic. And so, but look at what the 5th year into the 6th and 7th year looks like. And so now this isn't, but this, we have to test this with actual market analysis. But so far, this has really been giving us the right directionality. And also it's been a really good move. And then, this is, you know, let's keep our eye on the prize. Could this happen? You know, it's like, we can't say for sure, but we have to test it with real market analysis. But so far, so good. And so that would be maybe something that I would show your sister. And so then if we go back and let's in fact just go look at this is the S&P 500, and this is let's actually go back a little further here and look at this one. And so
there's nothing bearish.
So here's the bear market top of 21.22, and just to give people orientation. And then we have this big downtrend action. Here's our low in 22.
Right.
So this, now we're starting to set up an accumulation structure, as we saw in the decennial, for the beginning of a rally phase into 23 and 24. And keeping in mind, of course, that the S&P 500 is heavily dominated by the Mag 7 type stocks. And so, but nonetheless, look at this beautiful uptrending stride. Now, once we finish the accumulation across here, we can take a horizontal point and figure count, which is part of our old school Wyckoffian technique. And that gives us a way to be able to estimate the potential for how high the market could go, as we did for distribution. Gave us a count that works so well. And here is, this isn't really a spring. I call it a spring and a test. Normally those come at the end, but it does have the effect of undercutting the selling climax.
Right.
And then a really good rally up to the top, to the resistance area. So now let's take a look at what
the X's and O's are saying.
Yeah, now I've shown you this chart. We got together in April last time, so I'm sure we looked at this, but right here in January of 23 is when it appeared to me we were completing what we call the last point of support, which pretty much completes accumulation. I said, okay, we haven't really rallied up and out yet, but this is an important place. We had a really good turn. Let's count this. And so I counted it, and I took what we call segments, and the segments give us literally they're like train stations along the journey where the market will stop and rest. And so you can see we had, first of all, let's just take the count area. The LPS went down to 3775 S&P, and the low was, call it, 3500. And I was posting up these charts and power charting on my blog, which is at stockcharts.com, and people thought I was certifiable. But you know, I see it looks like distribution, I count it. If it looks like accumulation, I count it. And I'm a strictly a reasons are optional kind of guy. I'm a technician, and so that's a warning. It's a warning. I just let
that's a disclaimer.
Anyway, so but look at this count. So we still have ahead of us a count that goes as high as 62.75, 65.50, and people are like going, you know, you're smoking something. And I'm like, okay, so, but here it is. And look at this beautiful redistribution count and how it got us right into the range of the lows. So anyway, and then I have a slightly different, so I've shown this chart here numerous times, but let's look at this one, which is just a little different. And so this area here, and this is April of 24. This is right before we met last time. And I probably took this for us, you know, look at here, but it's slightly different scaling. So it looks different, compacts the data more, but beautiful downtrend, throws under the bottom of the channel. And that is a measure of an oversold condition. And I took 2 counts. And look how close this gets us to the prior count that I had, 6350, 6700. And here's the amazing part. I can make this count bigger. And when we get, and so if we do get this ripping 2025, there is a cause built for the potential for those higher prices. So, you know, wrapping those two ideas together. And so we could count from here over to here, and certainly people might want to even capture this chart and take that count. Just keeping in mind that we always let our market analysis
evolve,
guide us. Yeah.
Always
so
reassess when you get new evidence. You reassess.
And so, having said that, the other thing that I think is kind of a phenomenon here is the broadening out of the market. And so I think this, if we do get some kind of a correction in the NASDAQ, in the megas, then that could be a negative for the whole market. I'm hoping that the NASDAQ just goes through some sort of kind of a range bound situation. Institutions are way over their skis with these stocks. I mean, way over their skis. And you can see here, if we look, this is the advanced decline line of the NASDAQ going back to 2020. Here's the top in 21 of the bull market peak with the throw over of the channel. And then down we went, and we have a more severe throw over potentially this time. And so we have to be really careful here. And look what happened as we completed the first quarter. We had this just ripping rally from October of 23 up to here. And then the NASDAQ 100 hit the wall. It became what? The NASDAQ 7. And so, you know, these stocks are just going sideways, but this is what the index did. So it's the NVIDIA index, you might say. And
so we haven't had a throw over, well, a little mini throw overs that it's currently negating.
And here, look what we have in the actual
now.
Yeah, look what we have here. We do have, in fact, have a throw over at the top of the channel with the climactic orientation, we always look for climaxes to end our advances, as we had one here in 21, and now we have one here. So typically when you see a climax like that, you say, okay, if we get a break here, a big outsized break, then we're going to be range bound for a while. And now I make wishes in the market and I never get my wishes fulfilled. So my wish would be that all that the NASDAQ 100 does is just go into a range bound condition.
And
that would allow
about a break of that support at 19.5, which we're challenging right now. That's about 1,000 points. 1,200 gets you, 18,000, 18.3, which would
right.
just be a correction, right?
Right. And so look, here Dale's absolutely right, because the thing we notice here, we have two throwovers. So here's the second quarter rally, ends with a climactic surge above the channel, but then look at the response to this.
Big
is
red
this
candle.
And expanding volume. So we have spread in the opposite direction, and we have volume. And this big red, and those tell us that there is unbalanced supply showing up in this index. And now here, like, this should be support that gives us a rally. And I know we're weak this morning. I don't know if we're below this.
We're right there at 19.5.
Yeah. So it should attempt to hold support, but if it breaks that, you're right on. I mean, it's spot on. And then we're down into this support area.
Yeah.
And so this is the thing that happens with distribution, is that oftentimes it doesn't even build a top. It just makes an inverted V top, and then it's just volatility.
Yeah, that big break last week, that gap lower opening.
Yeah,
you have a lot of people trapped up there that are hoping that the support holds. So I don't think we put in a low until there's some capitulation under that.
Well, I believe you. And here now, for the time being, so what I've done down here, Dale, is I put a relative strength line. I love looking at relative strength. Normally I look at the S&P, but we know that it's infected with the MAGAs. Where what I did is, instead I put there's an ETF, which is the equal weighted S&P 500. Right. And so I like to look at that, and we know that the market's been broadening out here of recent, which I think is really good. And I'd love to see a broad, wide market, especially if we go into 2025, because that's a sign the economy is getting better. And
Bruce, the complaint by technicians, not you, but a lot of people before we had that historic day in the Russell, was the market's too concentrated. It's only these 7 stocks that are making up for 80% of the gains.
Right.
And because of that, they were bearish. All right. So they tried to short it and, wasn't successful. Now they don't have that leg to stand on because of the breadth thrust that we had.
Yes.
And now the market, after we had that great day, the, MAG 7, which led the market up, what leads the market up can lead the market down, I believe. So even though we're broadening out, does not mean that the NASDAQ 100 cannot break hard. And I even saw an example by a guy named Dean Christians. You know him? He's a CMT too, where he showed the market not topping, and there were a few periods with the market still not putting in the top, where you had 34% and 68% sell-offs in semis.
Mm-hmm.
Even with the market not declining.
And
in general,
I do think that the narrowing breadth is very worrisome but it's worrisome certainly for these for the S&P and for the NASDAQ 100, because they're dominated by these few names.
Right.
And that's very worrisome. And even I have been talking a lot about it. But the best thing that could happen is that you have a market that just broadens out. And and so that, for now, I think that is a super bullish thing. The chart on the right is maybe adds to your comment, which is, this is the equal weighted RSP going back to 2022. This is the bullish structure accumulation zone as seen in the RSP. And here are some counts. And now this is the ETF, but look how beautiful this is. This is a classic Wyckoff accumulation. Signs of strength here as it pushes up, keeps coming back into accumulation, but it from higher levels, which is a very, very bullish sign. Volumes expanding. And then you have this big count, and look, this little swing count and the bigger count now confirm each other at 186. And so this suggests that we still have higher to go, and this count could be made bigger. But I suspect if we fulfill these counts, which goes as high as 198, that, you know, we probably get arrested in a reaccumulation for another run.
I'm sorry, Bruce, go ahead.
No, go ahead.
Do you have X's and O's for NAS 100? Have we put some down, some O's in there?
See, you can just never really be completely prepared for Dale.
Okay.
And
well, I'm just it's a weakness.
I have them, but I'm not sure that I put them in. But
okay, no, but it's okay.
Let's see what I have here. So this is kind of fun. So this is the NASDAQ to Bitcoin.
Yeah.
And the thing I've noticed about NASDAQ and Bitcoin is that Bitcoin tends to turn up and down prior to the NASDAQ index. You can see that happening
again. It happened again here.
Happened again. And so, and in this, I think the fact that there's such correlation, but with more volatility in Bitcoin, suggests to me that these are just both really instruments of speculation above all else.
Measurements of liquidity.
Yep. And so here we have this thing topping out, and this is just a point figure for Bitcoin. And this goes back, I think I showed this the last time I was on, and I know we're about out of time, but
oh wow, we got to your your target was hit.
Look at how beautiful that was. Really, right to the box. And so then let's see. And then, okay, so this is just another example of Bitcoin, 75,573.5. And here's a chart up to date. So this is where we hit right here. Right. And then look at what I think has characteristics of potential distribution. And so I was just looking actually.
I was looking for maybe 40 grand in Bitcoin.
That this is becoming a big count. So I wouldn't argue with you at all on that. But I apologize. I don't see where I can just put my hands. I do have NASDAQ 100 point figure charts.
Not necessary to apologize for bringing so many great looks. It's like everyone was a pearl, and there were enough of them to string a necklace for Mrs. Cleaver.
Now you're really taking me back.
And you remember? Ward would come home, and she was always wearing pearls. So she wears them.
That's right. While she was cleaning the house.
Oh yeah, always clean a house in a nice dress, and Anyway, maybe we'll go back to those days. There is a segment of our population that would, in fact, me. Give me a Leave It to Beaver day.
Yeah,
be
leave it
nice.
to Beaver. Yeah, yeah. So
Anyway, look at what
yeah,
people are saying.
we have to watch out for Eddie Haskell.
Yeah,
So
yeah, he's always trying to give people the business.
yeah.
And you just gave people great insight and great work. And you know, if people want to study and learn Wyckoff, you teach them.
Yes, they can go to Wyckoff Analytix, and there's lots of free material, and there's courses and videos and
Yeah,
on and on and on. And of course, my blogs are at stockcharts.com, and there's Wyckoff Power Charting, Wyckoff Power Charting, and those are all absolutely free. And I'm working on one right now. I hope to have published this week. And I'll leave you on this Russell 2000 chart, which is a big accumulation study going back to
418.
22.
That's a double.
Yeah, look at how big the structure is. Oh my gosh. And I haven't even counted this reaccumulation right here.
Wow.
Yeah, and this is a beautiful rising lows, rising highs, and out it goes. It's into key resistance, may have to do work here, but if we can get this market broadened out, it could be a really good thing for 2025.
Yeah. So, and when you know, after this little pullback ends, you know, I don't think you're going to want to go back to the MAGAs. That's the main message. You're going to want to be buying cyclicals and, dare I say, regional banks.
Yes,
they're a big part of the Russell, the KRE.
That's right. And that's a really good thing to see strength and good performance from financials.
Yeah, they were all folding, and now they're going to double.
Right. And so that I consider to be really, really good. And then here's the Wyckoff Analytics. We do a weekly Wyckoff Market Discussion, Ramon and I, and I'm sure we'll do another free one here real soon. So just stay tuned. And
Bruce, it's really a service to teach a methodology that has lasted the test of time.
Goes back well over 100 years. Yeah,
you're a great ambassador for it.
Oh, thank you. And
you know, so you know, sometimes it's not the method; it's how it's also communicated to people, so they can absorb it and utilize it. And I could tell that you have the demeanor to teach, and I learn from you every time you're here.
Well, it's always the most fun for me to come hang with you all and hear your shout outs.
Well, follow at the minimum, everyone. If you're watching it live or you see the video, go to Bruce's website. You can find him on X at RD Wyckoff, and talk to Bruce and learn what he knows. You know, it's a pot of gold. It's still going to be you doing the interpretation, but that's why you have mentors, and you learn from people that have been using it for decades. So while it's available, do it. You know, you never know. Bruce may just take off to an island and just
start watching reruns of Leave It to Beaver.
Yeah, you know, sitting under a palm tree. So thank you again, my trading warrior brother. Appreciate it.
Thank you, Dale. Thank you, Blake. Thanks, everyone. And
so I'll get a hold of you, Bruce, and we'll talk in the fall.
Love it. Okay.
All right.
Take care, everyone.
I hope that, you know, the summer season, trading season, that pips rain down on you and all the people that interact with you.
Beautiful.
Thank
you,
Bruce.
Dale.
You're very welcome. So people are thanking you. Great presentation. Yes, nice content Bruce provides every single time. Remember, everyone, don't just count your pips, count your blessings. The team is there for you in 12 minutes on the Morning Edge, and we'll see you tomorrow. Adios.
Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.